So if you're watching markets today, you may have been asking the question, what the frick is going on with gold and oil? So my initial thought, something I mentioned in the Iran video, was that the market thinks that this deal between Oman and Iran is going to hold up because gold jumped a fair bit, which could indicate that the market is thinking oil is going to stay low, which means the Federal Reserve won't have to hike rates to keep a lid on inflation, and the loose financial conditions can keep going and gold can climb, right? So that's the case for gold, but there's another component there. I also talked about the yen carry trade, and little did I know that they were very related. So I'm going to get into why gold jumped. Today, Scott Bessent stated that he thinks that FIMA, that's a FIMA, the Financial International Monetary Agency, needs to have a higher cap because the treasury market is greater. So FIMA is a standing repurchase facility where if you have U.S. treasuries, you can go to the facility, you go to this facility, you lend them your treasuries, or you give them your treasuries as collateral, and they give you U.S. dollars that you don't have to sell your U.S. treasuries to get, right? So typically, and this is why the yen carry trade is important here, because Japan is having high inflation, and they have a negative carry trade. So yen is just flowing out of the country and into foreign assets. And the Bank of Japan, they really can't hike rates, even though they need to stop inflation. But they can't hike rates because their national debt is 200% of GDP, which means if they start hiking, then their entire financial system can't really handle the stress from those higher interest payments. So they have to hike very, very slowly, and this is causing the yen to decline in value. They're going to pull out all the stops to support the yen. Typically, that would mean, because Japan is the largest holder of U.S. Treasury notes, that they would sell their Treasury notes, bills, and bonds for cash, for dollars, sell those dollars into the FX markets, and buy yen to prop up the value of the yen. Now, this would be bad because if you sell treasuries, that's increasing the supply of treasuries, which decreases the price and increases the yield, the interest rate that the treasuries pay. Now, that's bad for the United States because if the interest rate on our treasuries goes up, then we run into a debt issue because our national debt is 120% of our GDP, and our interest payments are the largest portion of our national budget, our fiscal spending. So they want to try to figure out how to support the yen, because if this whole thing just collapses, Japan is going to have to sell the treasuries fast. That's not going to be good, because if you sell lots of treasuries into a market which the U.S. Treasury market has had just absolutely abysmal demand, like rock bottom demand, nobody is wanting to buy treasuries, because we've got inflation and we've got a debt issue, which means over the next 30 years, odds are that rates are going to have to be higher than they are now, or there's going to be a lot of inflation, and other assets will do better than those treasuries, so people don't buy them. So anyway, what is this FIMA, not FEMA, FIMA. What does this FIMA have to do with anything? Why is it important? So this facility lets Japan, any country, but specifically this is important because of what's going on in Japan, collateralize their U.S. treasuries. So right now the cap is $60 billion, and Scott Bessent, who's the U.S. Treasury Secretary, is saying that we need to raise that cap, right? So any given day, today, tomorrow, whatever day, Japan could go to FIMA and say, here is $60 billion worth of treasuries. Please give us $60 billion worth of dollars. They get those dollars and then sell them on the foreign FX markets for yen. They get the yen, boost up the value of the yen, but here's the key, is they didn't sell the treasuries, right? So you're not impacting the price of the treasuries, and you don't run into the issues with debt sovereignty crisis or any of that. Now, there is an issue, but not at the level it is at now. So, how much would Japan need to be able to fund or liquidate without liquidating their entire U.S. Treasury position? 1.1 trillion. That's how much Japan holds in U.S. Treasuries, 1.1 trillion. Right now it's 60 billion. Scott Bessent is saying higher. We need it higher. So, who knows how much higher it's going to go? From 60 billion anywhere up to 1.1 trillion, or maybe it's just infinite, indefinite. You see that with a lot of things. They're temporary. This whole thing was set up as a temporary stopgap for COVID to prevent a flash crash in bonds. Now, what does this mean for gold, silver, maybe Bitcoin, mostly gold and silver? Japan will be selling dollars. And now this is if the FIMA cap gets raised substantially. So right now it's 60 billion. It's a drop in the bucket. It's not really doing anything substantial. But if that gets raised, you start having a structural flow of collateralized treasuries. So the treasuries aren't getting sold; they're just getting held. It just becomes a standing liability. It's like the sword of Damocles. It's just floating there, dangling, ready to fall. But it's not falling. So the interest rates hold steady, but the dollar is getting sold, so the dollar, DXY, declines. Now, if you know anything about, that's a textbook setup for gold to boom, right? So we saw the run-up in gold recently, back in January, maybe peaked out in like February, March, something like that. I was part of it. My brother invested. I got, part of it. Sold a little bit up there, bought a little bit on the way down. It kept going down farther. I think it's back up to around where I got in at. But the point is, it's a textbook setup for gold. On top of that, you've got your central bank buying, multipolar world, de-dollarization, all that stuff structurally still out there. If you're interested in that, I would highly recommend watching the channel Infranomics. That's I-N-F-R-A, infra, like below. Nomics like economics, Infranomics. He's got a playlist called Hyperfinancialization, or a series called Hyperfinancialization, and it talks about the structural hyperfinancialization of the global economy and how it necessitates essentially higher interest rates, higher inflation in the United States for the next 50 years unless you get a currency reset. Now, lots of people think it's going to be crypto. If you look at Kevin Warsh, what's his face, Palantir guy, J.D. Vance, a lot of these people, they are very invested in crypto. Even Trump. The Trump family is very invested in the cryptocurrency. So it could be really good for cryptocurrency. Odds are, whatever cryptocurrency that you buy is not going to be the one they pick, because they're going to pick one that's just for them. They're going to make all the money, and everyone else is going to get left out to dry. So I'm not saying that you should go out and buy crypto because there's going to be a monetary reset, because odds are you're not going to pick the right one. Anyway, that's the story with FIMA. It's a rolling repurchase agreement. And you might say, well, it's a temporary stopgap, all this stuff. You look at the reverse repurchase market, all this stuff that was put into place after COVID. These things, they're temporary. They don't go away. They don't go away. They just hang out there, and the liability never gets settled. It just stays outstanding, which you could say is like adding pressure to the system or easing pressure. If easing pressure short term, adding pressure long term. Either way, it's bullish for gold. I think that's a big part of why you saw gold shoot up today, and maybe it won't stop. I still think that oil is going higher. So typically when oil goes higher, so does the dollar, and that means there might be a better entry point for gold. But if you're in oil and you're in gold, you've got a pretty nice hedge there, because one goes up, the other goes down. I guess if you're in some bonds right now too, then you're all evened out. But I would stay mostly away from bonds, short-term bonds, whatever, fine. But long duration bonds, I mean, yeah, you might get in at a good time. If you're a bond trader, you're thinking of time, go right ahead. But over the next 50 years, yields will be higher. And so the bond trade is not, I don't think that's where it's at for the next 50 years. If you want to sit around in cash, wait for the crash, try your best, but I mean, this FIMA thing, you're printing more dollars. The dollars are getting issued out of thin air, right? Because they're being loaned into existence. They're collateralized by the treasuries, but now there's treasuries and dollars. You don't sell the treasury to get the dollars, right? That's even. Accounting, that's zero. There's the treasury 1,000, the dollar 1,000. There's 2,000, not 0, 2,000. So you're increasing the supply of dollars, which could be inflationary and is basically the framework for why your scarce assets can keep going up. So is this going to be a big driver? Most of the people who hype this stuff up are really blowing things out of proportion. I don't think it's going to be a major driver. It's just tacking it on to all of the other drivers for the long term. But it might be. If you see, instead of 60 billion, 600 billion FIMA cap facility, then you've got yourself a serious thing there, because there's like 170 or 180 countries who all have that cap available to them. And so you're looking at just Japan, $600 billion getting poofed into existence just for them. And then you got 180 other countries that can also all have poofed into existence 600 bill. So do the math, not sure what it is. It's a lot. It's a lot of money. So anyway, something to snack on, something to think about. If you own gold, nice. If you don't own gold, now's probably an okay time. I wouldn't have said that a few months ago because it was pretty. People were pretty excited about it. The price was pretty sky high, and it got there very fast. But now it's in a much better place. I think it's a fine time to buy it. So anyway, that's all. That's FIMA. Look it up.